Toronto real estate price has dropped below a support value. What's going to happen and how does Toronto compare to other cities? Is Toronto's problem unique to itself? Hi everyone here. So as promised, we're going to talk about how Toronto price is changing and how does it compare to other cities this time and my worries for Toronto's pricing. Okay, so let's look at on screen. You can see that this is the HPI benchmark. Okay, what is HPI? Is a home pricing index that's developed by the Canadian Real Estate Association to analyze the typical home value in each city. Okay, the price of a typical home. They remove the most expensive ones, the cheapest ones. They kind of look at the typical home range, and they do a lot of mathematical adjustments to make sure that when this value moves, it's not because, Midtown sold a $10 million house, therefore the average price goes up. They removed these type of things, okay? So that when this value moves, it's going to reflect the real direction where the market is heading in each city. So Toronto, as you can see, Greater Toronto, okay? This is the average price for a single family benchmark, okay? So no condos, just single family, semi-detached, like these kind of single family dwellings. They peaked, the average typical home, they peaked at February 2022 for 1.57 million, okay, which is, you can think back, okay, single family dwelling in 2022, peak of the point, a lot of the townhouse even selling for 1.4, 1.5, okay, makes sense in the GTA. And detached probably typically, 1.7, 1.8, okay, like even just like most regular, you can look at like a two-story benchmark, right? Two-story, which is higher, right? At the peak was 1.62. Single family, just combining one story, two story, everything together, okay? So it's a pretty good benchmark to show how the value has moved. And you can see that in the past 2-3 years, it's moved kind of up and down, okay? It's never, whenever it goes up or down, it's never a straight line, okay? I mean, when it was going up, let's say from 2018 to 2022, it was a pretty quickly, a kind of like exponential growth, right? But it dropped from 2017 from a high point, 2017 to 2020, 2018, 2019, and then it kind of exponentially went up after COVID started happening here. Before that, it was a pretty, normal time, right? The slow recovery. But COVID and the low interest rate environment and also the QE, flooding the market with cheap loans, it kind of really flooded the real estate market. All the other assets like stocks also kind of got very high valuations during that point, right? So unsurprisingly, it crashed, 2022, but it kind of went up again 2023 to a higher point. It dropped to like 1.23, and then it went up to 1.36, and then dropped again to 1.24. And then in 2024, it went up again to 1.31. Okay, interesting. So you heard 1.23, 1.24 twice already, right? That's kind of where it dropped to. And then in 2024, March, it went up to 1.32 again. And then it dropped, by the end of last year, it dropped down to 1.23 again. Okay, so you heard 1.23 3 times already. Okay, 1, 2, and 3 times. So if you are used to trading stocks, you can see, okay, there's some kind of like supporting line, okay, it's supporting value that's kind of supporting the GTA real estate market above that 1.23 level. And every time it kind of went up smaller and smaller, okay, and that's typical signs of a falling market. It just, each time it goes up, it recovers to a smaller peak. And then it dropped in 2025, it barely moved, okay? From 1.23, it went up to 1.25, and then it came down to 1.24 again, okay? The 4th time in May 25. So 1.2324 seems like the magic number that's been hovering around for 4 years, never failed to support that line. And then it dropped again from 1.24 in May this year, it broke through. In June, it went down to 1.21. In July, went down to 1.19, even below 1.2. In August, it went down to 1.18. And then in September, it went down to 1.17. That's a line value we've never seen in the last 4 years. Okay, and that is kind of went back to, what value is this? February 21. Okay, it kind of went, for the first time, it went back to early 21, okay, or even before 21. So that is on its own kind of like a surprising factor, right? And between May and September, or even October this year, we can imagine the change in sellers' mentality of letting their properties go for cheaper. Okay, I see a lot of transactions on its own where it used to sell for 2.2 million, recently sold for like 1.6. There's a lot of even cheaper homes used to sell for condos 700,000, now letting go for 600,000 or even like 500,000. We've seen like 2 bedrooms condos selling, in Vaughan, for example, selling in the even under 450,000. And we see that, what used to sell like a entry-level bungalow used to sell for 1.2 million, recently selling for like 950,000, right? So there's a lot, and these numbers I haven't seen even last year or the year before, never seen them, okay? So it's kind of a pretty big change in the seller's mentality in Toronto in the most recent half a year, and brought the price level all the way back to 2020, okay? I mean, luckily, we're still above the big sort of hike. But if you look at, like, say, specific markets, a lot of them has gone back to 2019 level. Okay, I've seen condos selling at 2018 level, okay, in Toronto downtown. So that's pretty common, right? Different markets behave differently, but it's worth noting that on average, we're kind of hitting below a threshold that used to support the Toronto pricing. And for the reasons we discussed already in the last video, I'm not going to repeat it, but we want to see if this is a problem in just Toronto or other places in Ontario or other cities in Canada. So if we compare ourselves to Greater Vancouver, right, which is often, being compared to between Toronto and Vancouver as two most expensive markets, you can see Vancouver, as I mentioned, they did have a pretty big drop recently too, but they are still pretty safe sort of comparing to their previous year's levels, right? Their drop this time is nowhere near as bad as Toronto from the peak to the trough, right? And also if you look at a few years back, you can see that Vancouver, they had a bigger drop between 2016 level to 2018 level. So Vancouver had more foreign buyers. Okay, that's when the foreign buyers ban happened in Vancouver. I can see it had a bigger impact on the market. Toronto, it does have foreign buyer, but not to the same extent of problem as Vancouver does. So when Toronto implemented the foreign buyer tax, it also dropped the market, but compared to Vancouver, it's not as significant. And however, this time, we know that there's no foreign buyer problem anymore. It's more purely based on demand and supply and the market, right? And how much speculation, or what we call the bubble, there is in the market. Toronto behaving worse than Vancouver because majority of our income to support the real estate pricing is coming from local economy, right? People who buy real estate in Toronto, they work in Toronto, they invest in Toronto, they live in Toronto, right? But people in Vancouver, that might not be the case. They could be generating income from other countries and just decide to retire or buy a home in Vancouver to enjoy life, right? That's how a lot of those expensive homes in Vancouver are afforded. And you can see the change is nowhere near as significant as Toronto this time, because Toronto, we all know Canada has a really bad economy. So the local economy is impacting Toronto more than it does for Vancouver. Now, how about other cities, major cities, like Montreal, for example? Toronto, like comparing to Montreal, you can see Montreal is a very, different line, right? Like it kind of, after 2022, of course, it dropped a bit when the rates started hiking, but then the bottom was already hit in December 22. Okay, Toronto had a few kind of continuous drops, but Montreal never did. It just kind of kept going up. Why? Because it's cheap, right? If you look at Toronto, you can see how big the price gap is between Toronto and Montreal. Even as of today, a single family benchmark, a single family home, typical single family home, in Toronto, it's still 1.17 million. And after all this increase in Montreal, it's only 684, okay? So half of Toronto's pricing level still, right? You can buy 2 houses in Montreal, 1 house in Toronto for the same money. So you can see, and that's why, like, being a big city, there's people gotta live, right? Like there's a lot of migration from Toronto out to the east and west, so and to the more affordable areas, and you can see the price difference. If you look at, for example, Ottawa, right? Ottawa, they had a little bit different behavior than Montreal does. It's a bit more similar to Toronto, where it had a peak in 2022, and it's still not back to the same level. However, at least in Ottawa, you can see the bottom is kind of improving. Okay, the bottom line where it drops to, it's slowly trending up. It's at least on a recovery path. It's not like Montreal that already surpassed the 2022 level. Okay, Montreal is already higher than the 22 level. Ottawa, it's still lower, but at least it's recovering on a recovering path. And if you look at, say, other cities like, you know, Calgary or Edmonton, Calgary has been on a pretty strong growth, right? Ever since COVID hit. You know, it kind of, the low interest rate moved the real estate properties like values up to a peak in 22, and then it dropped a little bit. It bottomed in December 22 as well, similar to Montreal, and it just kept going. If you compare Calgary to Montreal, you can see that they are pretty much the same pricing now. I mean, Montreal used to be a lot cheaper than Calgary, because Calgary, they really didn't move between 2016 to 2020 because of the oil and gas industry being sluggish during that time. Montreal kind of like just been slowly catching up, right? In 2020, they really finally met. And then Montreal took a faster growth than Calgary did. And then in the most recent period, when we started hiking rates, Calgary did better than Montreal. And eventually they are in the same position as of today. Oh, so that's quite interesting. And we know that there's a lot of movement of population between from Ontario to Nova Scotia for being cheaper and, you know, beautiful sceneries and nice place to live and a lot cheaper. Okay, so we can take a look at, say, Greater Moncton, for example. You can see that it's even half of kind of Montreal level, right? Montreal, Calgary, they're at 600,000. Greater Moncton, you can buy a typical home for 380,000. Half of Calgary, maybe like a quarter of Toronto, right? Or a third or a quarter of Toronto. Very affordable, and it's been going up. It's same trend as Montreal. It's kind of been trending up. It had an even smaller drop probably from 22 to the bottom. Again, it bottomed at December 22, and it just kept going up. And it's not the only place. New Brunswick, for example, similar trend in New Brunswick, kind of kept going up. St. John's, right? You can see St. John's, it's even kind of stronger growth, right? Between 22 until now. So you can see, like, you know, Newfoundland, you know, also not as strong, but still kind of also on a positive upward trend, right? If you remove Montreal and Calgary, you can see all the Eastern Canada cities, they've had a pretty solid 5 years of growth, right? And what about the Midwest, kind of the, you know, Saskatchewan, you know, like Manitoba, those areas? Let's take a look. So Saskatchewan, in Saskatoon, for example, I mean, we can see, you can argue, I mean, there's not a lot of, you know, great economy going on, but just because, you know, it's cheaper, and you know, think about like a doctor, for example. You make $500,000 in Toronto, you make the same $500,000 in, you know, Greater Moncton or Saskatoon. You know, unless you're really picky on your food options, you probably enjoy a much greater life or much more lavish life, right? having real estate price being half or like a third of where Toronto is, and you get paid the same. Or if you're like you work in a bank, you're like a branch manager for one of the big banks, you probably make 100,000, 120,000 no matter where you are, right? But the cost of living is much better in these other places. So no wonder you can see the price has been pretty strong in Saskatoon, right? If you look at Manitoba, let's say Winnipeg, you can see it's a similar trend. Winnipeg average price is only 400,000, right? But it's kind of on an upward trend as well. So the conclusion is Toronto have a unique problem on its own, and we discussed part of the reason is half of the pre-construction closing in the whole Canada is in Toronto. It's flooding the market with a lot of supplies, and Toronto real estate being very expensive comparing to these other options that people can choose to live in, especially now people can work from home. But is Toronto the worst of all the markets in Canada? That's not true either. This chart on the screen, you can see that this is comparing the different cities, their year-over-year comparison, okay, between last September and this September. So Toronto, you can see price is down, okay, about 5.8%. Okay, Greater Toronto is one of the biggest drop ones. And on the top, you can see it's the one we talk about, right? The Quebec, St. John's, Newfoundland, Saskatoon, Edmonton, Saskatchewan, Montreal, they all kind of went up between 7 to like 18%. Okay, there's other cities doing better than Toronto, but if you look at just Toronto on its own, comparing to other cities below Toronto, Waterloo had negative 5.9, Peterborough, Barrie, and Ontario in general, they actually did worse than Toronto. So Toronto is actually one of the better ones in Ontario, because Toronto is still the biggest city, there's a lot of demand, the rental rates are still strong. But if you go to like Peterborough or like the cottage country, it's even worse. Okay, Ontario has had a very bad few years. And expensive areas in Ontario, like Oakville, Milton, for example, lower, bigger drop. London, Hamilton, Mississauga, right? If you look at them individually, they all did worse than just GTA on its own because of the investors flooding there. You can see it's all showing here. In the last 12 months, Waterloo, London, Hamilton, right? They're all, and Barrie, they're all kind of suffering even a bigger price correction than Toronto did. So it kind of shows you what goes up must come down. And as investors, don't over concentrate in one area, don't keep your eggs in one basket. Just kind of keep an eye on the bigger market trend and know the risk, right? Because as we talked about in the last video, Bank of Canada just said we're done with rate hikes for now. Next year, as we analyze, we could even see a rate increase. So, brace yourself, keep the financial planning sound and safe, and really manage your downside risk is the best kind of advice I think anyone can receive right now. And pay attention to liquidity. Okay, liquidity of your assets is very important. The same money invested in, like, say, ETF, it's not the same as in a house, right? Because when something happens, you need that money. In an ETF, at least you can cash it out very quickly despite having a loss. But in real estate, sometimes even when you want to cash out at the right time, but it could take you a very long time to actually cash out. And during that time, which caused by a liquidity issue, the price could really make a big difference during the time when you make your decision to sell and when you actually sold it, okay? And that's the risk. Okay, so that's how I want to share today. Hopefully you enjoy the content, give it a like, and until next time, ciao.